Good morning, and thanks so much for tuning in. You're watching Trade Talk on BK Prime. My name is Alex Matthew, and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Apart from markets, I think this week a lot of news in geopolitics. You have Prime Minister Modi that's heading to the US. You also have Antony Blinken, the US Secretary of State, that recently met or concluded his trip to China. And US President Joe Biden saying that some of those ties are getting mended. That is being seen as perhaps a bit of a positive cue for the global markets.
Absolutely. And in fact, this morning as well, you did see another round of rate cut that has come in
Yes,
from
for China.
China, right? So that is something which will be absolutely crucial because this is two more lending rates that have been cut, and this is to spur the economy. Now, how the metal pack reacts to this is going to be something that we need to watch.
But looking at trade yesterday, I think we saw a lot of chop and churn, a lot of chaos, if you can call it that. You saw the bank nifty fall quite precipitously at one point of time and pulling the benchmarks lower. The PSU banking pack, though, was an outperformer, right?
Absolutely. In fact, the major pressure in yesterday's session was coming in from the private banking space, as you mentioned. And clearly, the Nifty has been failing to surpass its all-time high levels. It actually fell below the 18,800 mark in yesterday's session. Now, interestingly, what's happening is there's a switch happening from the large cap banking space to the NBFCs. And that's something which is pretty much evident from the kind of price performance that we are seeing as well. In fact, broader markets have been outperforming. As we mentioned, metal stocks will continue to remain in focus on the back of the China loan prime decision that has come in this morning. If you see in terms of bank nifty as well, overall it's still anemic, Alex. If you see, in spite of the kind of moves that we've seen over the last couple of trading sessions, you have the VIX, which is also on a consistent decline as well. Clearly, if you go to see the day's highest points in yesterday's session was around 18,881, and that's the point from where the Nifty is again shying away. In fact, if it's making higher highs as well in the last 5 trading sessions, but what's happening is it's facing pressure at higher levels, and then we're starting to see profit booking that's coming in. So overall, if you see, it's important for the Nifty to close above those 18,777 levels to actually witness a further up move to come in from there. And the downside support exists at around 18,710. Now, if you see in terms of the F&O data as well, around 119,000 put contracts were unwound, whereas 449,000 call contracts were added. The highest put OI is at around 18,700 strike. And if you see on the option side, the data what is coming in is suggesting that there is a slight shift that's happening from a broader trading range perspective. So that's coming in at around 18,550 to 19,000. So that's what we will see. But in the interim, the immediate range is 18,650 to almost 18,850. So these are interesting levels to watch out for. But the key thing is that the expectation with regards to markets, achieving the life high levels in terms of this expiry, that probably is shifting, and that's what analysts are saying. The confidence of the analysts is also like moving ahead now.
Certainly. So that's those are key levels to watch, and you said that the range is broadening, and that 19,000 mark will definitely be watched. I think we've been struggling to hold above 18,000 as things stand right now, though. For now, let's turn to individual stocks. And of course, yesterday there was quite a bit of action that we had here in the newsroom as well. IIFL Securities, and this is in line with what the Securities and Exchange Board of India has been doing over the course of the last several years, and going after brokers that it says have mismanaged client funds. This is the latest, of course, with regard to IIFL. The news is that they've been barred from onboarding new customers for a period of 2 years. There are a lot more specifics to that. And of course, IIFL has said that it will contest this order. But Sayaja is joining in to tell you everything that you need to know. Sayaja, thanks for joining us. Give us a sense of what this is about. What was the context? There were several investigations that were done over the course of several years. How did it culminate in this order?
Thank you, Alex. After rigorous investigation spanning 6 years, SEBI has barred IIFL Securities from onboarding new clients for the next 2 years. The action has been taken for violating various provisions of the SEBI circular providing for the code of conduct for stockbrokers. According to the regulator, between 2011 and 2017, IIFL failed to segregate its own funds from clients' funds and misused clients' funds for various sundry purposes. Pursuant to the findings, two inquiry proceedings were initiated against IIFL in 2017 as well as in 2021. During the inquiry, SEBI found 26 of 45 client accounts without the label client account. Additionally, it discovered consistent transfers to the pool account, which IIFL used for transactions like bonds and mutual fund investments. Sample data also showed IIFL utilizing its clients' funds to settle the obligations of clients with the debit balances. For these violations, SEBI has barred IIFL from accepting new clients for the next 2 years. In a statement late last night, IIFL said that it will be appealing against the said order before the appellate tribunal. Thank you, Alex.
Thanks, Aja, for taking us through the details. It's going to be interesting to watch because clearly, if you see from a total active client perspective, IFL still comes in the top 10 list as well, though it's at the lower end of the top 10, but it's still there. Now, how does it impact? I mean, obviously, you will not see new client additions happening, but what happens from a sentiment perspective when you talk about the existing clients is something we need to wait and watch. And that data that comes in terms of, from the stockbrokers on the quarterly basis as well is going to be interesting.
Also, just a quick mention, the tone is important, I think, from the regulator, where they've said that since 2017 onwards, the words that they've used is, it seems like IFL is atoning for the mistakes that it made in the past, and therefore a complete scrapping of its license would not be appropriate.
Absolutely. So what has happened in this is that the SEBI had come out with an order back then in 2000, and by the time IIFL actually responded and they took a corrective measure was only 2018. So the major issue SEBI has over here is as to why so much time taken,
yes.
right? It's not that they've not corrected or the concerns that they had, but the time taken has been very long, and that's the reason why this penalty. Now, what SAT does, as Saja is mentioning, is going to be important for IIFL as well. But apart from that, the aviation sector is going to be absolutely in focus in today's session. Sajid is also going to fly high with Indigo, Sajid.
Well, it's not going to be 1,000 aircraft in the skies for Indigo for sure.
Right.
They have a very unique model, which is buy and lease back, and they work on an operating lease of 6 years, which basically means that they're working on younger fleet and fuel efficient fleet, and at any given point in time, they're not going to have even though the 500 aircraft order has come in and there is a pending 480 odd aircraft order which is in the books, it's not going to be 1,000 aircraft which is coming in. But what Indigo has guided is that it's going to double its capacity by 2030, and this order book is going to help it achieve that kind of capacity or doubling. It already has a 61.4% market share in the May season, basically. So it's need to be seen whether how much of more consolidation it can take place. Now, this is a 500 aircraft order which is spread, which will take care of its needs between 2030 and 2035. Now, over the past 4 to 5 years, they have given nearly 830 aircraft orders, and 480 aircrafts are still pending, which will come from now to 2030. And as the fleets get rotated, there will be old aircrafts which will be sent back and the new ones will come in. And that's the model in which Indigo works. Younger aircraft, 6-year operating lease, and that gives them enough cash flows as well as new fleet to go around. So currently the fleet size is around 300 odd, with operating Airbus aircraft nearly 264 and remaining being ATRs. There is going to be some increase in the fleet size, but it's not going to be huge because they're going to rotate these aircrafts as and when they reach 6-year operating lease.
That's an interesting perspective to have, that it's just because 980 aircraft orders are pending doesn't mean that Indigo will end up with 1,000 aircraft.
We don't have that kind of parking space.
That's a fair point. So you can want to have a Lamborghini as well as several other cars, but then you can only park
one at a time.
In Mumbai, certainly. Yeah. All right. Well, that's the view on the aviation space. But let's take you through another stock that is going to be in focus today. Moil, and this is on the back of several announcements that have been made, and I think this relates to issues that have been discussed in the annual report as well, the capacity addition that the company is planning. Systematics has a new report on this, and Rishi is joining in to tell you all of the details. Rishi, what are you picking up?
So Systematics has maintained its buy rating, but it has also cut its target price by 8% to 201 rupees, which implies a 23% upside with regards to yesterday's closing. Now, the EBITDA per ton in FY23 is currently at 2,800 rupees, and this is expected to go up till the 4,000 rupee mark by FY25, but it will still be lower than the FY22 levels. Now, this higher EBITDA per ton is because of the realizations from its three major products, which is manganese ore, ferromanganese alloy, as well as the manganese dioxide. The realizations are expected to remain flat or increase only marginally. So because of this, the EBITDA per ton will not actually go up to the FY22 levels. Now, the brokerage has also cut its EBITDA estimates by 11% for FY24, and this is because the manganese ore prices are lower by 7%, and this is because of a oversupply in the international markets as such. Now, while Systematics is also positive on its various capacity expansion plans, it also notes the patchy track record of Moil with regards to meeting several targets and timelines. Now, Moil has given a capacity target of 2.5 million tons by FY26 and 3.5 million tons by 2030 compared to its current 1.4 million ton capacity. Also, another thing to note is that a lot of the domestic demand for manganese ore comes from crude steel production. Now, for every ton of crude steel, you need 30 kgs of manganese ore. And crude steel production is expected to double, which means an additional 11 million tons of manganese ore demand that will come in. Now, Moil has also enhanced its exploration activities for FY24 with a target of 70,000 meters in area, which is a 68% uptick from its FY23 levels. Now, Moil has, with regards to exploration, it has also signed MOUs with the GMDC as well as the governments of Madhya Pradesh and Chhattisgarh. So, overall for Moil, although capacity expansion plans are a positive, but lower manganese ore prices are a concern for it.
Right. And I think with this, from a leadership perspective as well, since the induction of Ajit Kumar Saxena as the chairman and MD in 2022, what they've said is there's more seriousness in terms of the overall business, and that's what analysts have been pointing out towards as well. But apart from Moil, you have HDFC, Alex, that is in focus, and probably large block deals that could be on the radar today.
Certainly. And I was looking at the news this morning, and in the podcast that we do, I think quite a bit of it had to do with stake sales or potential stake sales. The first, of course, as Hiral pointed out, was HDFC. And they're looking to sell a 90% stake in HDFC Credila, which, in case you weren't aware, is a dedicated education loan company and the only one at that in the private sector space. It is to be sold for 9,640 crore rupees, of which 2,000 crore or thereabouts is going to be a fresh issue. This is being sold to or rather, this is essentially in line with the regulatory requirement that RBI stated, that said that they would have to divest stake up to 10% after the completion of 2 years from the amalgamation with HDFC Bank. So this is something that was going to happen anyway. It's happening sooner rather than later. In case you didn't know, the loan book of HDFC Credila stood at around 15,000 crore rupees at the end of March. It had a PAT of about 275 crore rupees in the year gone by and a revenue of 1,350 crore rupees. Very quickly, I'll take you through the block deals as well. HDFC AMC, there's going to be a block deal of 10.2% by Aberdeen Investment Management, and that's the entire stakeholding of Aberdeen in this company. The amount that is being sought is 3,920 crore rupees. The shares have been offered at a range of 1,800 to 1,892 rupees per share, and that's a discount of close to 5% from Monday's close. Timken India, also in focus. The parent, Timken Singapore, is looking to sell around 8.4% stake in the company, is looking to raise money at 3,000 rupees per share, which is a discount of 14% to Monday's closing price. And post that, if it sells the entire 8.4%, it will still be a majority owner because it owned about 68% stake at the end of March.
So I think lots to watch out for in terms of blocks and bulks. But apart from that, from the fundraising perspective, Alex, you have Ether, which is in focus as well. They've got the board node in terms of raising funds via QIP, which opened on yesterday, and the floor price is 984.9. So let's watch out for this one. And the stock recently hit a 52-week high as well. Canfit Homes as well has got an approval to raise around 5,000 odd crores, and they will raise 4,000 via onshore or offshore debt and another 1,000 crores, and that would be via QIP or of preferential issue. They've also appointed Ajay Kumar Singh as an additional director and whole-time director as the designated deputy managing director. Apart from that, as we mentioned, PSU banks have been in focus. In fact, Bank of Baroda yesterday actually hit a milestone in terms of market cap to the tune of 1 lakh crore, and it was the second bank after SBI, though the gap between the first and second is
It's
huge
huge,
in
yeah.
terms of market cap. You have JP Morgan, which is positive on Bank of Baroda. They have an overweight for a target price of 230. What they are indicating is that, one, the market share is improving. Second, that the bank has been able to actually attract talent from the private sector. Overall, the credit costs are expected to remain low, and there is high amount of value unlocking that is seen as well, which could be a near-term catalyst from a potential stake sale in the credit card business to a IPO of the life insurance business. And in terms of the EPS, that's, for Bank of Baroda, we've seen the highest EPS revision, and there is room for more. So watch out for Bank of Baroda today as well. NHPC has been rated as a new buyer at JM Financial. They have a target price of 55. So watch out for NHPC and a SJVN, which is a buy for a target price of 50. In fact, both these counters have been on an uptrend as well in the last couple of trading sessions.
Absolutely. So those are the list of or rather, that is the list of stocks that you need to watch out for in trade today. It's going to be an action-packed session based on what we've seen in the recent past, and we're just a few minutes away from that. The indications are that we might start with just a little bit of a downtick, but we'll have to see, and we'll see soon enough. Do stay tuned. Lots more coming up in just a short while. This is BQ Prime.